we have in front of us the Nifty mid cap index and the small cap index record highs and tremendous momentum, as well as unsatiable demand for mid caps from all parts of the market. Is the market overheated in your experience, or is this par for the course that we see coming in for the next 6 months to a year?
We get a good economic cycle, domestic economic cycle over the next 3-5 years, as we feel we should be getting compared to the last 4-5 years. I think if we get that, then even if we might get certain pullbacks along the way, um, those to my mind will turn out to be still investing opportunities even in the mid and small cap space. Markets are economy rather, I would say, more than the markets are actually broadening out or will broaden out even further. We've seen even I think to some extent it's the phenomenon even in some of the global markets. We've seen that 6 months back the returns were relatively more concentrated, coming out of a handful of stocks within the indices or very small parts of the market. I think even in the US and a few other areas, the markets are broadening, and I think India, it has already started to broaden and will probably broaden even further. So I think this is something which is still on. And last, I would also like to tell you with regard to this question is that, even though the indices have done well in the last 6 odd months, on a 2-year CAGR, they are still not uh, anything very close to what we've seen in the past. So in good economic cycles or domestic economic cycles, we've seen mid and small caps compound even at an aggregate CAGR of around somewhere between 25 and 30% for 4-5 years, against which today, over the last 2 years, we've seen CAGR rates of around somewhere between 20% on the mid cap and about 17-18% on the small cap. So there's a fair bit to go. And last but not the least, I think the way the economy is shaping up and also the way the overall economic construct is these days, there are many more opportunities which are coming through, new types of business models which are emerging,
Right, sir.
which are relevant in the current context. So I think they're adding to that excitement as well.
This larger global context that we are placed in right now, juxtaposing scenarios. The West is dealing with higher inflation. The Fed is still hawkish, wants to continue to, fight the inflation. China is facing deflation, and we are somewhere in the middle. How do you see India growing in this kind of a scenario? And do you think things that we had not imagined are now working in favor, and that may perhaps lead us to even higher growth that we are imagining?
So, Sakshi, I would say that you look as far as the US is concerned, and you called out US and China. So, and obviously the other two large relevant economies of the world, and we somewhere in between. So, to my mind, I think US is managing a decent soft landing. I think uh, a year back, same time last year, there was a heavy debate around whether the US will get into a recession or will it be a hard landing, and or whether it will be a soft landing. I think 12 months from then, we can now safely say that they managed a soft landing. And how do you, how do you reconcile that? It is basically that, look, I mean, their economy is not toppled off, despite the fact that they've gone more than 500 basis points of interest rate hikes in a span of about 12 odd months. And in the process, they have brought inflation down quite well, partly through the moderation that they brought about in the economy, and partly base effect and everything else which has played, and partly slowdown in commodity prices. But I think 8-9% inflation down to 3, I can understand that the target is still 2 and they have got work to do. But I think in general, I would like to say that the economy is not toppled off, and therefore to that extent, it is a reasonable soft landing. From here, I would like to think that the labor markets are somewhat softening, provides further room for them to kind of stay put, moderate the economy a little more, and yet ensure that things don't go completely awry, and try and get to that target of 2% or a little below that. So I feel quite okay with the US economy, to be frank with you. On the other hand, China, well, I mean, they've got some work to do, and they've got to think through a little bit of the readjustment that the economy is going to go through. So I know that there is a certain amount of confusion. Probably, at least it is apparent to outsiders that the real path of the economy is not very clear. But they are taking a lot of steps, and we've seen, the last 1 month, they're taking several measures, many reforms, if I were to say so, be it in the form of interest rates or real estate or few many other things. But they are in a transition of their own. They want to take a higher plane. They want to do things which are somewhat different compared to what they've been doing in the past, whether be it in terms of technology or whether be it in terms of manufacturing. And in that, India should be a beneficiary as well, because in doing so, they will vacate certain pockets which they have been used to do. So, and we'll be a beneficiary of that, whether be it in mid-level electronics or whether be it in chemicals or a few other things that they would want to vacate. So I think we are in our own journey. China is in its own journey, and therefore I don't see India's vulnerability as much, because we are not necessarily dependent as much on US and China alone for our growth. I think we have our own drivers. I'm not saying that they are not important. We are part of the global market, but it's just one last thing which I would say before you move on to the next question is that 2004 to 8 was the period, if you guys recollect, was strong global growth, and India too benefited, and our own investment cycle and capex cycle did very well at that time. But it was largely a function of what was happening globally. I think now what's happening in India is more on its own. I think we're having a good economic investment, excuse me, an investment cycle, even when the globe is not doing very well, especially the two twin engines, the US and China economies are not doing very well. So, which basically once again means that we can assert ourselves, we can do things on our own and chart out our own course.
If you like the video, do like, comment, share, and subscribe.